as I said. But let's just deal with what's going on in the markets reasonably quickly. It's budget week this week, and really there's not a lot of data other than that. So what I propose to do is just to explain. We've got the budget on Wednesday. Let's have a look at our economic calendar. The economic calendar for this week. So for all of you who are joining us, some for the first time, what we tend to do is to spend our first sort of meeting or discussion at the beginning of the week just assessing the data that's due out for the rest of the week. And typically we just focus on the calendar. We use the Forex Factory economic calendar. It's very helpful and useful for us. It helps explain, gives a weighting to a lot of the releases, so we know whether they're important or not. So this is the impact side of things. So really the most important one, certainly as far as the UK is concerned, is that we have the budget. That is the budget announcement by the coalition government, and that is expected to dominate the news this week, certainly for the UK. We've got a lot of concerns about, a few concerns about our AAA rating. Fitch put Britain on negative watch a week ago. I think that may be on quite a few investors' minds as we go into the budget speech on Wednesday. Curiously enough, budgets used to be a surprise, as I'm sure most of you know, but it seems that a lot of it has been telegraphed way in advance. But basically, it's a tricky balancing act. He's got very little money to play with. We're expecting some sort of giveaway. There's talk about cutting the top rate of tax, perhaps in 2 stages to 45 and then 40. But really, a lot of this, that increase in the top rate of tax has done nothing to boost the Treasury's coffers, really, and it's very, very negative for business. So I think that's something they're looking to do, and that'll be balanced perhaps with other measures to tax the well-off assets, but primarily properties. Other than that, we've also got on Wednesday, which is equally important. So the budget is, I think, well, it depends when Osborne stands up, but I think it's around 12:30 on Wednesday afternoon. We also have our Monetary Policy Committee minutes, that's the MPC minutes, out on Wednesday at 9:30. So those are the minutes that are taken from the meeting at the beginning of the month in March. And we'll be looking just to see what's happened in terms of the vote. And we know that they kept rates on hold at 0.05%, and they maintain the asset purchases. That's the QE of 325 billion. And most people are expecting that the Monetary Policies Committee's decision was unanimous. Other than that, we've got business activity data in the Eurozone Purchasing Managers report, which offers the latest details on the health of the Eurozone region. The data is expected to show that in Germany, both manufacturing and services improved in March, which is good news, remaining above the 50 level. So above 50 is positive, and below 50 is negative. Okay, and that's basically following on, really, I think our optimism has improved following the Greek debt swap. Certainly has eased quite a few concerns in the Eurozone. Other than that, in the US, we have a lot of data about housing. On Tuesday, we've got housing starts. That's actually a leading indicator. Housing starts, we have house sales, new home sales, existing home sales, but housing starts are, what houses have, literally have started their build, and that is it's quite a leading indicator. So, but it has a sort of a medium impact, but that's something that will be followed quite closely. We're just looking for signs that the pace of sort of new home building is picking up, although February's number was January's number was reasonably strong. We hope that February's number of housing starts will remain. So we're looking for see the continuing pace of growth seen over the past 4 months. Other than that, on Tuesday, we have got our CPI, so that's normally reasonably important, but that's definitely on the down track now, and we don't expect any surprises there. CPI has been very important for a lot of us. Inflation's been way above target. There's been this constant debate last year, and announcements by the Bank of England that inflation will be falling sharply back to trend. And that's certainly looking like it is the case. And that's part of the reason why the markets are looking relatively positive, because consumer sentiment is improving, certainly improving on the back of the fall in inflation. So we're expecting CPI to dip further to 3.4 from 3.6%. So that's very much in line with what was expected by the Bank of England. And that's really taking a lot of pressure off. Funny thing is, of course, anyone who has been filling up their car recently will know that, for diesel, and most of us do have diesel cars these days, you're now paying sort of 145, 146 a litre, which, for a lot of people is, that's not fall off in inflation. Obviously, other prices are falling, so, that's the reason why the CPI rate is falling there. Okay, that's pretty much it for this. It's a fairly brief introduction to the data this week. A lot of it is focused, as I say, on the UK. It's fairly light in the US in terms of data releases. We will give a further update on Wednesday. But in the meantime, thanks very much for listening. Good luck with the markets today and for the rest of the week.